Hello and welcome back to The Note. One of the more pleasant surprises of last year was the resurgence of sterling against the dollar in the latter half of the year. So let's talk today about cable, as that exchange rate is better known. Now, at the moment, the pound is actually stronger against the dollar than it was at the beginning of last year, despite a very sharp fall in between. That obviously reflects the many positive surprises that we've had out of the UK economy of late, but has it all been overdone? With me now to discuss this is the global strategist at Société Générale here in London, Kit Juckes. Kit, thanks for joining me once more. Let's start by taking a look at the relative position of the US and UK bond markets and how cable compares to that. Has this gone further than bond market differentials would justify?
I think it's gone as far as they possibly could, and I think we're going to see this come back a little bit more together in the weeks ahead. In both the UK and the United States, better data in the second half of last year. The introduction of the word tapering into our lexicon took rate expectations higher, bond yields higher, and the pound higher against the dollar because we were so surprised by the strength of the economy. But we're probably going to see Mark Carney have more success than Janet Yellen in terms of making sure that strong economic data don't translate into higher rate expectations.
Okay, now let's take a look at where the market is in a broader context. Obviously the pound had this big devaluation ahead of the crisis. We're now pretty much at the top of its range since the crisis, however. Again, is it fair to say that it's looking expensive now?
It looks expensive to me. It's at the top of a long-term range, and I think in this sense, from purely tactically, selling the pound against the dollar, selling cable up at the top of the range feels much easier than selling the euro, which has thwarted all the bears for so long.
Right, and whereas the pound, as we can see here, has shown the propensity to move around quite dramatically along the way.
And some of the things that have made the euro hold up, a huge current account surplus, a central bank which is doggedly hawkish relative to what you'd like it to be, simply don't apply with the UK, where the MPC is likely to try very hard to keep rates lower than perhaps they should be, and where the current account deficit was at least nominally 5% of GDP in the third quarter of last year.
Okay, now let's finally take a look at how speculators are positioned. And again, obviously a lot of people have been making this bet of late. Again, that's a sign that we're now overbought?
I think so, and you start from a big short position in the middle of last year. So the people were caught by surprise and bearish in April, May of last year, and they've reversed that bet, taken the pound to the top end of its range. I think that's what makes me think, okay, I don't know if the pound's going to start going down tomorrow, next week, or in a month's time, but all the good news is in and the positions are all the wrong way around, and I think we are increasingly vulnerable, in particular, to the balance of payments.
Okay, we've covered the hurly-burly in the markets. It looks as though the pound might be overpriced. Talking longer term now, what are the longer term determinants of where the pound should be valued?
Well, I think the balance of payments is the first one, which bothers me. Our trade deficit is widening against Europe in particular steadily, and as long as we grow faster than the Eurozone, that's going to continue. I can't see that changing on a long-term view. Secondly, the income that the UK earns on its overseas assets relative to what we pay foreigners invested here is turning increasingly ugly. And again, as we become a bigger net debtor to the rest of the world, that's going to get worse. And finally, the saving grace for the UK for years has been the strength of its services income. We're not big exporters of goods, but we earn a lot from the city, from lawyers, from accountants, and have done. I'm uncertain, in particular with regard to financial services, as to how long that can continue. Let's put it that way. And
as I speak to you, I can see several tall skyscrapers growing up in the London skyline behind your shoulder. I mean, plainly, this looks a little toppy in terms of building out the city. Is it fair to say then that even if we're growing, it needs to be the right kind of growth for the pound to sustain itself?
I'd be much happier if we had, if you like, the right kind of growth. If we've decided that growing financial services relative to the rest of the economy is bad, or growing London relative to the rest is bad, then we need infrastructure investment around the country. We need education. We need to boost the kind of smart end of manufacturing that we could use as the power for future growth, not London housing, people coming to live in London and so on.
Okay, Kit, thank you very much indeed. I think that gives you a fairly clear perspective on where the pound has got to. There's good justification for the rally it's had over the last few months. There's been a lot of good news. It's hard, though, to justify taking it up much further.